What's up, guys and girls? James Hunter here of the Florida International Group of MVP Realty and the co-creator of The Fig U. The Fig U is a online e-learning course that we teach personally sometimes and also sell online. A course that's developed for residential agents that are looking to get into commercial real estate and also investors that are looking to get into doing more commercial real estate that have really never got into that arena yet. So I taught a course the other day with my business partner. We were talking about interesting things that really were sticking out in the paper today. So I'm going to talk about two articles today. One of them talks about the delinquency in the markets right now jumping up, and the other one talks about refinancing of some portfolios. The reason I'm talking about these two things is one of the things we talked about in the course was delinquency going on in the banks. What's going on? Is there good deals out there? What I will say again, and I always say this, and big time investors will tell you this, there's always good deals in the market depending on where you buy it. If it's a good deal, if it's under market, if you buy it right and it's managed right and the rents are right and it's in the right area, you're going to find a good deal, guys. Always. There's always deals being done in the marketplace. Also, delinquency is always going to be a factor, and the reason it's being a big factor right now is because the interest rates, but hopefully with some softening of interest rates, we're going to see that start to go down, especially with some of the commercial banks that are having their loans start to renew. They're working through some of these things, and some of these are even getting refinanced out to larger banks or larger equity firms. I know this because obviously, if you don't know me, I spent 18 years in the commercial banking world. I keep my thumb on a lot of the big banks in the area. I talk to a lot of the executives, and I work with a lot of the regional banks also for my projects and other deals that I'm looking to refinance for some customers, and hopefully get some financing for my buyers also. So the first one I would like to talk about the article that is really interesting. People say that there's not a lot of refinancing going on, but obviously Blackstone's one of the biggest asset holders out there. But it looks like, I'm going to read this. There's four lenders that are partnering up to refinance $1 billion in industrial portfolio retail space for Blackstone. And not just because it's Blackstone. I point this out because I talked about this in the course the other day. The factors that are going to make this a good deal is, and I'll go through this first and then we'll talk about that. Blackstone acquired this portfolio in 2019. It was the first, and then 2021 was their full operations in net cash. So in their first full operations of cash after they bought this portfolio, the net cash flow experienced a great increase of 21%, guys. Tremendous. Occupancy went from 92% to 94%, and net cash was $56 million to $68 million in 12 months. 21%. Huge. What are the two factors that equated to this? Better management, and they decrease the expenses. The two things I talked about in the course the other day. If you decrease expenses, which they decrease them 18%, and obviously Blackstone's a hell of a management company and they know how to manage properties. So, and then also the appraiser that appraised these properties also made notations that basically they were below market rent. So they're going to get an even better increase once these leases come up for renewal. They're going to get a better increase in the portfolio, better increase on the cap rate, and obviously a better return for their investors. Two of the things that they noted here, which I think were kind of interesting too, is some of the loans were on floating rates, so they were able to renew these at a fixed rate cost, and that basically was a pretty good increase for them. And they restructured some of the debt, so they paid some of the debt down, restructured it, did a short-term amortizations, restructured it, or did some kind of sort of restructuring altogether. Um, the other good thing is this tenant mix in the whole portfolio. Out of 390 unique tenants, there was only two tenants that accounted for more than 4% of the total square footage, guys. I talked about this the other day. The problem is sometimes when you purchase a retail center and you have anchor tenants or you have majority tenants that are owning more than 16 to 20% of that space in that retail center or in that warehouse, flex space, whatever you're looking at, if they have problems, guess what then? You as the owner or landlord are going to have some real big issues. So I think that's huge. That was pretty interesting to read, that fit right into the course that we were talking about the other day, that we were pointing out. Another thing that was kind of interesting, talking about loan delinquency. Loan delinquency obviously is something that's top of mind of everybody right now. Interest rates are probably going to help this a little bit when these loans come up for renewal, but there's still going to be some delinquencies out there. I think the biggest thing to point out in here that we can take a look at was based on the unpaid balances, life company portfolios is 0.32% increase of only a 0.18. Fannie Freddie is at 0.5, and then Freddie Mac was at 0.24. A little bit of increase, guys, but nothing dramatically that's going to put these banks in or lenders in such a situation where they're going to have to start calling notes. The FDIC has their thumb on this, I guarantee. And plus, with the extra capital that they're making the banks hold on the balance sheets, it's really not a bit of alarming. And I'll just quote what they said about that, just to reiterate that. Basically, the Association for Commercial Real Estate said that there's no need for panic right now, and there's no need for banks for doing downgrades at this time. So that's really big when you see credit rating downgrades at banks and in major ways, then that's when things start to get a little shaky for the banks. A couple other good things that point out in here which were interesting, that kind of I always look at what my customer says, who is actually the one that owns the portfolios, to what the banks are saying. I always got my thumb on the banks and kind of what they're looking at and seeing kind of what they're saying. And two, good old news, guys. You know, what are they saying? Because they're getting it from either some other source, or they're kind of just inflating sometimes, and we all know they do that, but it is what it is. Deterioration in the industrials commercial real estate portfolio is beginning to materialize into office properties. That is true, but what I will say is I've talked to several banks and they're getting some of this under control, because what they're doing is they're taking this and maneuvering it and opening it up into converting it to office, or not office space, but more livable space, condo space. So they're starting to convert this, and actually New York City, you're reading a lot about New York City, is they're converting this office space into livable space, which is going to help out. And the banks are going to love this, because obviously it's going to create better cash flow, more consistency in occupancy, and all around a better deal for New York City and bigger cities, because they're going to have more places to live, and live here, work here type of situation will help that. Obviously, higher interest rates pose risk for commercial real estate properties. We already knew that, guys, but maturing fixed rate loans need to be renewed. And so that's obviously going to be something that people are going to be taking a look at on the bank side, on the investor side, because obviously when these higher interest rate loans come up for renewal, if they're even higher, it's going to be an issue. But if they get a dip down, it's going to be a little better for them. The lower rate interest loans, then those are going to be something that they're either going to have to try to restructure that from a bank restructuring standpoint, either telling your customer bring a little bit more cash, or picking up more assets that the customer holds. We've done some restructuring in the past in the banks when I worked there. Pick up some other assets. You can drive equity out of that, or do an all over portfolio restructure, and that way it still keeps it in a graded portfolio for when the auditors come in and take a look at it. So no big thing there. The start of the pandemic in 2020, the rate topped at 1.15% at the highest peak in more than 6 years. What's interesting, and I'll tell you this because I just know this because I've worked in the banking industry for 19 years, people are saying interest rates are at an all-time high in commercial. Yeah, they're high, but guess what, guys? They're not as high as everybody thinks, because when I was doing mortgage loans when I first started here 10, 15 years ago, we were writing loans at 6.5%, 7%. So you can still get a 7.5% interest rate on a fixed loan. Might be a shorter term, might be a longer term if they do an interest rate swap, depending on how they're structuring in the bank at this time. But still, rates are not astronomical bad right now when it comes to getting commercial loan. Now, when you're looking at commercial loans that basically need restructuring for, doing construction lending, obviously that's a different subject, and that's a whole different video that we would need to talk about. But I thought these were interesting articles to think about and actually look at. And then obviously we talked about both of these scenarios in the course the other day. Very unique. Obviously, some great information, guys. Always, thanks again for taking a look at our YouTube station, The Fig U Course. If we can ever help you out with investing or looking at buying or selling your commercial properties, give us a call at the Fig Commercial Group at MVP Realty. Thanks a lot, guys. Have a great day.